Hello, everybody, and welcome to our monthly webinar series here at NetElixir. Today, we have a very exciting one for you. This is one of our favorite webinars to do every year, and it's our 2018 holiday forecasts. Now, for those of you who have been here in the past, know that the holidays are one of our specialties, and we have predicted 5 of the last 6 holiday seasons correctly. So we take a lot of pride in these forecasts. And we really hope you learned something today. For those of you who aren't familiar with NetElixir, our goal is simple. We help e-commerce brands find and acquire new customers online. And we do that with a group of over 130 plus employees in 3 global offices across hundreds of iconic retail brands, including folks like Lenovo, Teleflora, Ashley Stewart, Century 21, and many others. Our team has over 315 Google certifications, and we're proud to say that we are a fanatically analytical group that helps you get more out of every dollar spent. Our solutions help you own the search bar, so no matter where your customers are searching and no matter what they're looking for, our goal is to help you own all of those search bars so that you can get more customers online. Now, we have a lot of slides and a lot of content to get through today, so I won't spend too much more on our introduction here. I want to make sure that everyone gets this information in the allotted time, but I do want to introduce our speaker. We're very proud and lucky to have our CEO, Udayan Bose, on the line today. He's the founder and CEO of NetElixir. He's founded PartyBingo.com, a part of Party Gaming, back in his earlier career, and is a guest lecturer at multiple schools and has been featured in a lot of prominent press, including Ad Age, Adweek, Media Post, and hundreds of others. So without further ado, I'd like to introduce Udayan and get started with our holiday forecast webinar. Udayan, take it away.
Thank you, Stephen. Hello, everyone. I hope I am audible. Just in case if there is any sound interruption, please do use the question bar and just punch in your note there. So what I will try to cover over the next 30 minutes or so is just quickly telling you a little bit as to how exactly we have come up with our holiday forecast for this year. We'll explain the method as well. Then we will sort of get into the 2 questions that we have been asked by, as Stephen was mentioning, that we have been speaking to a lot of folks from the press, and these are the 2 consistent questions which have been coming all the time. So I think that's the second part in this part, of addressing those 2 questions. The third one would be actually presenting the holiday forecast. So we have very specifically analyzed about 5 categories, and we will be releasing today the category level forecast for these 5 categories. And lastly, I'll sort of pass it back to Stephen, and he'll take you through the holiday resources. So quickly moving on, the first part is basis of our forecast. As Stephen mentioned, we have been doing it. The first time I did this forecast was in August 2008. So it's a little bit of a deja vu. This is our 11th annual holiday forecast. For this study, we essentially conduct an ongoing analysis, literally a week-by-week analysis of our own customer base of mid-size and large retail customers who are forecasted to have a little upwards of $600 million in online holiday revenue this year. When I say holiday revenue, again, defining it very specifically, it's the revenue that they are getting online entirely from their website between November 22nd, which is the Thanksgiving Day this year, and December 25th. This would also amount to a little over 320 million unique website visits. Again, this is pretty much a forecast for the upcoming holiday season across 5 main holiday verticals: gourmet food, apparel and shoes, home and decor, gifting, and consumer electronics. Very specifically in terms of the methodology as such, our week, as I mentioned, our forecast has been based on week-wise website visits, website sales. We also included the channel-wise investments and the cost per click data per channel. Based on these primary variables, we sort of build out our set of what we call the derived variables or calculated variables as such, and track them on a week-by-week basis, starting the first day of each year. The above data that I've referred to is segmented into mobile and desktop separately because mobile has been a consistent theme over the last few years now. And we really wanted to segregate and understand this exceptionally quickly growing force of overall sort of the mobile search as well as the mobile visits which are coming to the website as well. And then we compare this with the previous 2 years. So for this year, we'll be comparing with the same period, which is November 22nd to December 25th for 2016 and 2017. I must say that our forecasting model that we had built way back in 2008 has really evolved multiple iterations. And one of the things which has been fairly remained constant since the first version has been this weightage and the emphasis that we place in our model on the back to school metrics. When I say back to school metrics is we track literally hour by hour the overall back to school sales between the period of 1st of August and 3rd of September. So essentially we place a lot of weightage on that because that we have found to be a fairly good predictor, and as a result of which it has a greater than 15% weightage in our overall model. One of the changes, as I mentioned, the entire model has gone through multiple iterations. One of the changes that we have incorporated in our forecasting model is what we call the indicative Amazon sales data for those customers in our database who have an active presence in Amazon Marketplace. So these are the customers who are advertising from the website that we work with and who also have a presence on Amazon, that they sort of sell through Amazon or sell on Amazon Marketplace. So we have a particular weightage for that as well. And last but not the least, we have again always placed a significant weightage on the prior year holiday trends with a very special emphasis on the inflection points, if any. So let me spend just 1 minute. Again, I'm probably sounding a little too mathematical and geeky out here, but it's important because this is something that we have a lot of retailers who have sort of joined us today. So if you really track the holidays can be sort of captured as a set of continuous data, or it can be captured as a set of inflection points. So by inflection point, let me give you an example. So the day after Cyber Monday, so let us say Cyber Tuesday, we see one of those massive inflection points happening. So the sales that you see on Cyber Monday dramatically drops. Last year, it sort of dropped by almost about 40 to 45% on that Tuesday, Cyber Tuesday. By measuring the slope of this inflection point, you are able to figure out as to how the remainder of the holidays would be. So those are some of the very finer points, which really is one of the reasons why Stephen was mentioning in the last 6 years, we have been on dot with our forecasts for 5 of those 6 years. We sort of missed in only 1 year. And that's, I think, one of the reasons that it just sort of goes down to the nitty-gritties as such quite a bit. Moving on, let me start with the 2 questions. So these are the 2 questions, as I mentioned, that we also speak with quite a few reputed publications who are aggregating their own reports in terms of holiday forecasts. And 2 questions which have been consistently, we have been asked. The first one is, what were some of the key e-commerce and channel trends that we have seen in the first half of the 2018? And the second one was, since we specialize in retail search marketing, how should retailers be thinking about their search marketing going into the holiday season? Any guidance with respect to traditional engines like Google versus e-commerce platform like Amazon? So let me address the first part. So overall, as we are seeing, the year-on-year growth has been very strong. And these are the numbers from the 1st of Jan 2018 to 31st of August 2018. The orders have been strong. As you can see, it's like an 18% growth over 2017. And the revenue has been a 15% growth in Q1 over 2017. The only metric which has not really grown is the average order value and the AOV. And I'll sort of get to as to why we think that's really happening in one of my sort of future slides. The back to school results have been strong. So this is, as I mentioned, we have tracked roughly about 33 days to Labor Day to track the back to school results. So it has basically 25th of July on till I believe 3rd of September this year that we have tracked and compared with last year. So we are seeing a substantial increase or a year-on-year growth of 17% in the total number of orders. And we have in this study included all the back to school businesses that we work with directly. The revenue has gone up by about 14%. The average order value again follows the same trend. It is down by about 4% here. Moving on, there are certain other e-commerce trends. I think I'll just try to highlight 4 of them, which we have seen in the first 8 months of the year. The first one is around 12% of a retailer's total online sales, which is like combination of website and marketplaces, now happens on Amazon. So let me explain this part because it can get sort of interpreted in a very wrong way. So I really wanted to put some emphasis in terms of explaining this. So let us say as a retailer, your total sales that you are getting online from your website, from all marketplaces, everything combined is $100. So last year, when we tracked this number in 2017 Q4, we saw that $9 out of these $100 came from essentially outside of your website and the other marketplaces. So $9 essentially came from your being present or visible or selling on Amazon. Now that number in the first, and this is, I'm talking about August 2018, has gone up to about $12 for every $100, which is like 12% of a retailer's average total online sales is now coming from Amazon. That's quite a substantial jump, considering the fact that that Amazon's overall sales have been spiraling as well. When I say Amazon sales, in the sense the merchandise that they directly sell to their customers as well. The second trend that we have seen is that the mobile devices are now driving over 42% of the total website sales. When I say 42%, that's a pretty substantial jump up from 34% in Q4 2017. So we have been tracking the overall mobile contribution of total sales, total website sales as such. And this probably marks the largest jump that we have seen in terms of the mobile-driven sales as such. There has been a bigger jump in traffic in the first 2 years, but the overall percentage sales was still fairly low. But this is the massive, the maximum that we have seen, that the overall mobile number of orders through mobile devices has really jumped. So 42% is quite remarkable, considering that when we really refer back to our database, as I mentioned, we have compared the previous 2 years. Just 2 years back, this number was close to about 26%. So from that 26% to 42% within a span of 24 months is quite incredible. The third one, I think all of us are probably aware of this, is the GDPR and the Facebook Cambridge Analytica fiasco has led to stronger data privacy regulations. So that has been, I think, a key and a pertinent theme, which has really impacted each and every sort of a key channel or a player. The last but not the least, which I have sort of pointed in my previous slide as well, the back to school year to year, the sales growth numbers have been stronger than previous year. The previous year, if I'm not wrong, the number was just about 3% higher compared to 2016. So this is quite a massive jump that we have seen this year in terms of the back to school year-on-year sales growth. If you have any questions, please feel free to sort of use the question bar to type in your questions. I mean, we can absolutely address it. We would love to address all of your questions at the end of this session. Let me move on to the key channel trends. The previous slide was more on the e-commerce trends, but this is more on the key channel trends as such. So Amazon continues to increase its dominance in product searches. So we estimate more than 62%, I sort of do it purposefully for a little bit of an emphasis, of all the product searches now happen on Amazon. So Amazon clearly is winning the bottom of the funnel game. Very, very clearly. There is just absolutely no doubt in anyone's mind. The second one is very interesting. The percentage of all search queries that are voice activated continues to grow quickly. So we actually estimate that 30% of all the mobile searches would probably be voice activated by the end of this year. This number, when we had measured last, was much lower than that I can sort of assure. I mean, this was as low as about 16% just about a year back, so about 18 months back. So overall, the voice search again has been a pretty massive game changer when it comes to the channel contribution and the penetration as such. The next one, the primary channels like Google, Bing, and Facebook, they have literally made this the year of AI, right? I mean, whether it is sort of Google introducing the features like smart bidding based on the data-driven attribution, etc., or sort of Bing following the same route. I think smart bidding and the AI that has been all pervasive, and we don't really think that is going to relent anytime soon. As the channel sort of double down on increasing their efforts to make the entire platform, the channel platform marketing, entirely AI driven. And last but not the least, from the key channel trends, We are also seeing this very distinct trend of consolidation. So all the marketing assets are now getting unified into a marketing platform. So I think some of you are aware that Google AdWords no longer exists. It's now Google Ads. And very recently, Amazon announced that they are sort of packaging everything, their Seller Central, Vendor Central, everything into one Amazon advertising platform or Amazon Ads, right? So I think, what does it really mean for a marketer? Are we really looking at the channels, focusing on trying to maximize their share of the customer journey rather than the customer's share of wallet? Something which at least sort of is worth a significant amount of discussion and thought, right? So because if you're sort of trying to map and win the customer journey, and what is the percentage share that you have the customer journey, that's a very different ball game that you have compared to sort of trying to sort of win a higher share of the customer's wallet, primarily because your channel mixes can sort of change quite dramatically as well. Moving on, this is our forecast and prediction. So effectively, we have taken as a base our previous year's results and overlaid some of the trends, as I mentioned. Again, this is I must very clearly put out a disclaimer that this is entirely based on our data set. Again, those data set of customers who are in the data set and who are advertising on Amazon. We believe that Amazon's share of total online holiday sales is poised to cross 40% this holiday season. I know there are a lot of numbers that you would probably have come across. I know eMarketer, my friend Andrew, has put up a number of 50%. I saw another report 44%. So it's just purely based on our database. I really want to place that very, very clearly. So effectively, let me sort of move on to the second point before we dive into the forecast. How exactly should you be thinking about the search marketing program this holiday season? I think there are certain trends which are very difficult to ignore, right? I mean, as I mentioned, can you really change there is a massive paradigm shift which every marketer has to go through from trying to sort of own a share of the wallet to own a share of the customer journey, right? That itself has a massive shift. Second, understanding that Amazon now has a command of about 62% of all the product searches means that you can't really any longer ignore Amazon, the first one, right? The third one, we are seeing that 40% of all the online sales, at least, I mean, per our data set, is coming on Amazon. So understandably, marketplace is making a massive contribution. So what is exactly your plan, again, becomes important. Voice search has become a significant chunk. It is we are projecting that the percentage of all the mobile searches which are voice activated may go up to 50% within the next about 18 months. That itself is a pretty massive shift. So again, the fundamental question is, I mean, do you really have you even started thinking about the entire voice search playbook? Have you really created your voice search SEO playbook? Because if you have not, you probably need to do it now, today. The third one is product listing ads. This is again a massive shift. We expect, and this is again for those 5 categories, as I mentioned. This includes gifting, home decor, the apparel, etc. Are expected to drive 65% of total paid search sales this holiday season. I was literally smiling when the NetElixir intelligence group sort of shared this data with me, and I sort of referred back to 2014, and this percentage, believe it or not, was less than 12%. So in 4 years, it has gone from 12% to 65% of all the paid search. I mean, that is how powerful the entire concept of innovation and keeping track and keeping pace with the customer's evolving preference choice and the preference set is. Now, I think one of the things, again, just throwing a little bit of a curveball question to all of you, if you think that in 4 years, a company like Google, which literally minted money from its text ads, that percentage has increased about 4x over 4 years. My question to you fundamentally would be, how much has your business changed? My other question would be, or maybe the customer base and their overall behavior has changed, and how much has your business been able to understand, predict, and utilize these opportunities which are brought forth by change? Something to think about. It definitely requires a lot of thought process, because if you have not, and I think the Google shopping example that I mentioned is very clearly a case, I mean, then you probably will get left behind. So anticipating the customer behavior is becoming an essential part of running any e-commerce business. My last point on this slide would be, with the exponential growth in mobile, we are also seeing a massive growth in the local searches. It's basically a local plus mobile combination, right? Think of it almost like a near me searches and so on. You can sort of use the local inventory ads, location targeted ads, etc. But I think first of all, just very basics, first principles, you have to start with having a mobile site that loads in less than 3 seconds. We did a very interesting study because one of the areas of focus for NetElixir is very clearly the mobile search component. We did a study working with Google where we literally analyzed more than 500 e-commerce sites from the IR 1000 list and a little beyond, I would say probably IR 2000 list. And we were surprised to find that less than 15% of the companies really sort of qualified based on this particular metric. And that is I think the fundamental now. So I think the speed of change is something which you really sort of, or any business really needs to constantly keep pace with. So let me, with that, a little bit of a context to this thing, let me get into the holiday forecast. So we are predicting a very strong growth in online sales this holiday season of 15% year-on-year top line growth. Breaking it down further, we are projecting a 17% increase, a year-on-year increase in the e-commerce or the total online orders, and a growth of 15% increase in online revenues. Now, this I must say is our most optimistic forecast since we started doing these forecasts in 2008. And how strong is it? I'll just give you an example. So what we have tried to do in this table, we have tried to use the actual year-on-year US e-commerce growth data as measured by NRF at the end of the holiday season, at the end of the year. Normally, this report sort of comes out around the second or the third week of Jan. So 2012 to 2017 are the actual year-on-year e-commerce growth data as collected from NRF. And 2018 is where we are adding in NetElixir's forecast. We wanted to do that so that you have a little bit of a context as to how exactly we compare versus the previous years. Moving on, I really wanted to drill down a little bit on the category level. We have, as I mentioned, analyzed about 5 categories for this forecast. The first one is gourmet foods, where we are expecting a year-on-year revenue growth of 17%. The order growth would be roughly 17% as well, and there would not be any change in average order value. Apparel and shoes, we remain very bullish. This is the one which has probably the most aggressive overall forecast, with a 23% increase in orders year on year and a 19% increase in revenue. The AOV we believe will decline a little bit. I know I've been not really sort of directly giving the reason, but I sort of get to that in the next slide. Home decor we believe will grow by about 13% in revenue and 15% in orders and so on. So this, again, those of you, I know we have quite a few merchants sort of joining from different categories. I think I really would love for you to really point out and just reference your business as to how exactly it has done Jan to August for your respective category, and based on that, I mean, does it really sound in alignment with or in line with what you have been experiencing and what you are projecting for this year? We would love to know your feedback and comments. I mean, I think sort of Stephen will share with you the email addresses, etc. We would, or you can probably even ping it here as well. Happy to discuss. So some of the trends, and I really wanted to quote because it's all about trend mapping and trend watching, right? So some of the 3 trends to watch out for this holiday season. The first one is holiday gifting related search query. So we, as I mentioned, track the search query on a regular basis. We predict that volume to pick up from the Sunday after October 20th. So basically it is October 21st this year. You can see the first mini bump in the search queries related to holiday gifting. The reason I wanted to point it out, because smart e-commerce merchants need to have a plan to really maximize and grab that share of the wallet during that first bump. We have seen typically about a 5 to 7 day time lag between the search query bump and the actual online purchase bump. But something to notice, and this is not really just 1 year, we have exactly seen the same thing for the last 5 years now. So it's a fairly it's one of those trends that I can be very confident about presenting to you. The second one is probably a very easy extrapolation, because this is the longest holiday season that we have had in the last 10 years. So there are 33 days between Thanksgiving and Christmas. So because of the extra number of days, last year we had 32 days. This will drive an incremental sales volume. So it's I'm cheating a little bit as well, because I'm sort of comparing 32 and 33 days. We anticipate 3 specific online peak shopping periods this year. Again, the holiday season. The first one would be a 5-day period from Thanksgiving to Cyber Monday. So Thanksgiving this year is 22nd of November, Cyber Monday is 26th. So have your game plan sort of ready for that time. The second one would be the Green Monday period, which is 9th of December till 12th of December. And the last one is interesting, which we have seen in the last about 4 years grow constantly, which is the last minute or the last time buyer shopping spike, which happens primarily through mobile devices, which would happen between the 18th of December and 21st of December. You must excuse me if I sound a little direct or overconfident in saying that this will happen. I'm using the word will with a purpose, primarily because these are the 3 trends that we have seen now consistently happen over the last 5 years, and we do not really have any reason this year to think that this would change anything dramatically as well. This is where I sort of just try to highlight about four factors that would help drive the 15% year-on-year growth. The first one is, as we have discussed, the mobile shopping. We'll continue to search. We estimate 42% of the online purchases will happen to mobile phones. So I think mobile is reducing the friction. Now let me probably use this opportunity to discuss and present my thoughts in terms of the lower AOV as such. So we have seen that there is roughly about a 30 to 35% gap between the desktop orders and the mobile orders. And with the percentage of mobile sales growing, we are seeing the average order value either remain flat for most categories or decline marginally for most categories as such. The only difference, though, is the frequency of purchase has gone up. So let us say per customer, let us say e-commerce customer, you are probably getting about 10 purchases during this season. You're likely to get, thanks to this unique and an exceptionally powerful device called mobile phones, that probably will go up from 10 to 11. So that's the impact, that the additional thing, the frequency, and if you really offset with the AOV, still really drives a higher overall percentage growth overall. The growth of voice search. So voice search is very unique because effectively voice search mechanism is more of a Q&A, right? Because when you are asking something to, let us say, Alexa, or you probably are expecting an answer back. And Alexa will not really say that, you know what, you can sort of buy Duff from Target, you can buy Duff from Walmart. It will not give you a choice, it will just give you one choice. So there is a lowering of friction specifically for the staples. This will lead to a quicker purchase, right? There are the reduction in option by better identification through the AI of your prior purchase preferences would lead to the shortening of the search, shop, and buy path, leading to a greater frequency of purchase as well, which would again lead on to a higher e-commerce revenue growth. Heavy discounting. I mean, we have seen this trend. We have actually sort of very meticulously through this process analyzed the previous holidays. I would say the major sort of occasions as such. The first one being Valentine's Day, then we analyzed Mother's Day, Father's Day, and back to school now. So we have seen effectively that the retailer's average retailer discount has gone up by about 3 percentage points compared to 2017 for the same category of products. Let me repeat this again. So for the same category of products, the retailers are essentially offering a 3% higher discount around the specific occasions or the events or the holidays, or whatever you sort of want to call it. This has really led to a growth in online sales. So a combination of mobile shopping, voice search, and heavy discounting is very clearly sort of leading to a shift or a transition from the brick and mortar sales onto the online sales. I must say, I very clearly confess that I am not really, I don't really buy the fact that the shops, the brick and mortar stores are, it's the end of the world for them and everything is online. That's definitely not the case. But we are very clearly seeing a shift from brick and mortar to online. And last but not the least, I think all of us are fairly aware that we are actually in probably one of the strongest economic situations. I mean, the consumer sentiment is at par with the early 2000s, right? Which can feel good, but sometimes probably can feel scary as well. But it's like, let us put it, scary good. So strong economy expected to top 3% GDP growth for this year's calendar year. So all of these macroeconomic factors are making a difference. I really wanted to spend just a couple of minutes. I know I've sort of overshot the time limit, but before I pass it on to Stephen, I really wanted to emphasize, probably making it a little on your face, as to, we all know that Amazon will be the big winner, right? So no surprise there, right? But what is the trying to quantify the impact of this amazing giant called Amazon? Let's do some math. So last year we did or the US e-commerce is projected to have done about $84 billion. That was the actual online sales number during the holiday season. So if you really overlay a 15% growth on this $84 billion, that amounts to about $97 billion is projected to be the overall online sales this year, this holiday season. So the incremental growth is 97 minus $84 billion, right? So an incremental $13 billion will be pumped into the online purchases, online shopping, whatever you sort of call it. Amazon's share now, as we have projected, last year was 35%, and we are projecting that that would grow to about 40% this year, right? So 2017, I'm sorry, there is an inadvertent typo here. This would be 2018 Amazon holiday sales projection. It's 40% of 97 billion, so that makes it 38.8 billion. And last year it was 29.4 billion, right? 35% of 84 billion is 29.4 billion. So Amazon's additional holiday bounty this year is going to be almost $10 billion, right? So think of a situation where out of the $13 billion incremental online sales, $9.5 billion is going to Amazon's pocket. That's how strong the impact of Amazon is. What it also means is the projected incremental revenue gained by other retailers and online marketplaces amounts to $3.6 billion, right? So everything combined would be $3.6 billion. Now, I must again very clearly put out a note out here that this 9.4 also includes the merchants who are basically the GMV or the gross merchandising value as well for the other merchants who are selling using the Amazon marketplace as well. But just to give you an understanding as to how big and how dominant is Amazon as a player in this business. So that's, I think, so with this, let me just sort of summarize before I hand it over to Stephen. I see a bunch of questions. I would love to address them at the end. The first one is we are predicting a very strong holiday season with 15% year-on-year growth in e-commerce revenue. Amazon's share of total online holiday sales this year is likely to exceed 40%, and mobile shopping will continue to surge and exceed 42% of the total online sales. So with that, let me pass it on, transition on to Stephen. Thank you very much. I would be happy to address any questions that you have.
Thank you, Dan. That was great. Obviously, a lot of information covered there, a lot of numbers, a lot of trends. So I will cover the first question I get every time right off the bat. Yes, we will be sharing these slides with everyone afterwards. So please don't worry. You don't have to memorize all of this information. I do want to share a couple thoughts with you before we go. There are some resources that we've put together based on all of our holiday experience to help you win this holiday season and make sure you capture as much of that 15% as possible. The first one I want to share with you, which we briefly touched on when we talked about some of the heavy shopping periods during this time of year, is our search marketing holiday calendar. So with this calendar, you can see what we predict to be, based on past experience and future expectations, to be the busiest days of the year, as well as the highest opportunity days for you to pump more money into your online advertising budgets, right? So green days are ones where you can gain a competitive edge. Yellow are ones where you have the ability to boost your margins, and red where you can boost volume of sales. This can be found on our landing page at netelixir.com/holidays, along with the rest of the resources we'll show you today. So please check that out. It's live now, netelixir.com/holidays. While you're there, you'll also note that we have put out our most recent version of our wildly popular Holiday Readiness Workbook. So this is a workbook you can actually print out, go through, and throughout it, there are 20 different proven holiday success strategies. So you can work through each page either individually or with your team and make sure you're taking advantage of all the different trends and tactics that you can use to gain a competitive edge this holiday season. And finally, one of the most special ones, we brought this back after popular demand, is our holiday readiness clinics. These are actual 45-minute one-on-one sessions that can be done digitally and in some cases in person with our team that allows us to dig deep with you, really listen to your specific challenges, what's happening in your industry, share some competitive insights of what we're seeing others in your industry doing, and help you create a roadmap for holiday success. We consider these the no spin zone. That's a very stringent rule we have, right? So it's not a sales pitch. It really is a very informative session that usually goes from minute 1 to minute 45 completely, and sometimes a little bit over. So if you do want to run your holiday strategy by us and see where you're missing the ball or where you have opportunities to improve, please sign up for one of those at netelixir.com/holidays. All right, final call. It looks like actually we have questions, but for some reason, it looks like I'm not able to see them. GoToWebinar is having a little bit of issues here. I apologize for that, everyone. So what we will do is we will follow up individually with everyone after we solve this technical issue on our end and make sure that we get all of your questions answered. Again, I encourage you to check your inbox for the webinar slides later and to keep in touch with us for the future. Thank you, everyone. Thank you for joining our webinar, and happy holidays to you.
Thank you very much. Wish you all holiday success.